Hi, everyone. Welcome again to the 5 o'clock with High Returns for Real Estate Investors, Chicagoland Real Estate. Today, we are very fortunate to have Richard Colombik on our show. He is one of our inspirational CEOs that I interview every day. And he's an entrepreneur. He owns 6 companies throughout the US and Puerto Rico and is rated as one of the top 10 tax lawyers in the US. So Richard, with all the information that you've already shared with me previously and that we spoke about earlier, can you tell everyone a little bit about your background?
Sure, I'll be glad to, Melinda. Hi, everybody. Initially, I obtained my undergraduate, University of Colorado in accounting, got a CPA from University of Illinois. I then went back to law school at nights at the John Marshall Law School, which now is part of the University of Illinois as well. And as a night student, I ended up working 2 to 3 jobs, plus taking a full load, still graduated with honors. And last semester, I had to actually take 6 courses and got the most days in the school. But boy, I didn't sleep much. And I was fortunate because when I started law school, I was on the private tax staff of the Henry Crown family in Chicago, just wonderful people, billionaires back in the 70s. And when I came out of law school, I was hired a year in advance by Deloitte and Touche, and I did what they termed executive financial planning, meaning that I did the tax work and the tax structuring of tax shelters for some of the wealthiest people in the world, as well as the CEOs, the president, senior level executive staff at some of the largest multinationals in the world. Just fascinating work. Since then, I've not only owned a law firm, run a CPA firm, I am also one of the managing members of multiple firms in Puerto Rico, which include a captive insurance company, management firm, as well as a tax consulting firm. We've got a few other companies there, but those are the main ones. And I've just had a great opportunity through the years where I actually came up with a tax consulting concept to help lower the taxation of privately held companies that were successful and their owners. And since 1993, had the opportunity of myself and built up a staff of 52 people at one point in time. And we flew all over the United States seeking out the entrepreneur, the high wealth person in the town you never heard of, and used to travel 3 to 4 days a week all year round, hearing fascinating stories from people of how they made their money. And they made a lot of it. It was just great to learn there's so many different ways to succeed. And we would bring to them the high quality tax services that no one in the little boom towns had. And they were happy, and we did a great job in consulting projects and created almost an entire industry. And it's just been a lot of fun.
Well, that's wonderful. When we were talking earlier that you had mentioned about captive insurance, which I'm not sure many people know about, and it sounds fascinating. Can you tell us a little bit about that?
Absolutely. In fact, years ago, I taught a seminar to the Illinois CPA Society. In fact, I've taught over 150 seminars, and I've published over 150 articles. I'm in a current new book, which is Keep It, How to Keep More of Your Money. I also published a work for the Illinois Institute, Continuing Legal Education. I've written chapters in a few books. But let's talk about captives. Captive insurance is really a fascinating area. I got involved in captives in the late 90s. And a lot of times when you hear new ideas, sometimes it's because you either read something or went to a really cool seminar. In fact, I went to one at the Atlantis Hotel in Paradise Island.
Wow.
Because back then, captive insurance companies were all about being offshore. Today, offshore is a bad word and they're all onshore. But I learned about captives and began doing them and writing articles and publishing them and got into the captive business in the early 2000s. Now, what's so great about captives? Couple of things. One, if you're a part owner of a captive, and I came up with a structure that allows people to be a part owner for not a ton of money. What do I mean by not a ton of money? Captive insurance company is an insurance company that is generally owned by the investor, meaning if you're running an operating business, you've got high net worth real estate folks, you actually own your own insurance company. And up to $2.3 million a year of premiums that you pay in are not only tax deductible by you, but here's the catch on why captives are so popular. You don't have to pay income tax on the premiums you received. I'll make it a little smaller, easy example. Let's say you have $1 million of insurance, and you've decided you want to place your high-risk stuff with a commercial carrier, but maybe you're concerned about IRS audits, so you want regulatory insurance defense. Maybe you're concerned about lawsuits, so you want lawsuit protection. Maybe you're concerned about deductibles in all your insurance policies. Or maybe you're concerned about injury to reputation or loss of a key client. Tough to get it commercial, but you can insure that with your own insurance company. Yes, there has to be risk shifting and risk distribution, but of course, our company sets that all in place and also forms the captive. But I mentioned that you get your deduction for the actual premiums paid, provided they're actuarially calculated and they meet all the criteria. So let's say you're a high income taxpayer between federal tax, state tax, additional FICA. Illinois, surprisingly, isn't the highest tax state in the nation, will be soon unless they change their policies. But we'll just say between federal and state and additional FICA, someone's paying 50% on their income. Let's say they don't have a captive and they made $5 million. Huge income, I agree. $5 million, 50% tax, $2.5 million they paid out in taxation. Well, let's say they decided to cover insurance areas they before never had insurance for. Some of them I mentioned, there's lots more. They spend $1 million out of their $5 million from their business, and they insure all of these areas. Well, a $1 million deduction reduces their, quote, income that's taxable from $5 million to $4 million. If on $5 million, the tax was $2.5 million, the tax on $2 million and $4 million, is $2 million. So right there, their income tax went down by $500,000. Well, you say, well, what's the good about that? They lost their money. Wrong. They put their money into a captive insurance company that they own. And let's presume there weren't any claims that year. They deducted $1 million, saved $500,000 of income tax. Maybe it cost them $50,000 to run the company for the year. There were no claims, and again, all hypotheticals. They paid in $1 million, cost them $50,000, they have $950,000, and you say, well, now they have to pay tax on that money. Wrong. Captive insurance companies have a special exemption in the tax code that the forebearer of this actually started right after the original tax code back in the early 30s. It's been updated in 53, 65, 80, 2 years ago, 2016, and there's no income tax on premiums received. So this person paid $1 million to a company they own, saved $500,000 in tax. They've got their $1 million in their company's bank account that they own. They spent $50,000 to run the company. Well, they now have $950,000. And they saved $500,000 in tax. Not a bad deal.
That is not a bad deal.
No, and people ask, what if you have a claim? Well, of course you're going to have claims. But part of being a real insurance company is you pool your risks. It's what they call the law of large numbers. So for example, if you have $1 million of coverage and you have 10 policies, let's say you've written, each policy will have a claim limit, and you will take 50% of your risk and pool it with other insurance companies Again, that's what your captive manager does. Pools that risk with other companies. So in a worst case scenario, you're only covering half the risk anyway. In which case, other people are going to be covering that risk for you as well as yourself. And with proper planning and actuarials, you can build up a heck of a lot of money at a very low tax cost. Well, people generally say, that's fine and dandy. How do I get my money back? Don't I have to pay tax on it again? Well, yes, you pay tax on it, but not at ordinary income rates. Remember, we're talking about someone in a 50% tax bracket, federal, state, and extra FICA. For those of you who go, how could you do that? Well, places like New York, California, 13% maximum rate on wealthy people. That's 13% state, 37% Fed. That's 50. Throw on another couple percent for additional FICA for investments for high earners. You've got over 50%. So you've deducted it at 50%, but guess what? When you take your money back, it'll get taxed as a dividend or a long-term capital gain. So just on your federal side, that's only 20%. You got a 50% combined deduction, but you're getting a 20% federal rate back. Got to throw in state too. So you're actually not only retaining more of your money, but when you decide to, quote, shut down your company, you don't need it anymore, you're making a profit on the tax arbitrage too. So a double winner.
Yeah, for sure. Now, you had also mentioned that you were a resident of Puerto Rico. Can you tell us how come?
Well, I could tell you about the beaches. I could tell you about the great Puerto Rican people in the nightlife. But I actually moved there and set up companies with my business partners in Puerto Rico for tax purposes. Now, again, people will look at me and go, yeah, right. You moved out of Chicago winters to be in 85-degree weather all year round, but you didn't do it for the weather.
Well, that's
okay. I have to admit, the last time there was a blizzard in Chicago and I got a call and they go, how are you doing to the blizzard? And I go, what blizzard? It's 85 outside. And I got a few kind words. But aside from that, why did I move to Puerto Rico? Why did I uproot myself? Why did I end up affecting family members and friends? Well, the fact is they still have this marvelous thing once the COVID's over called airplanes, where I can be back in Chicago on a nonstop flight in 4.5 hours. My personal situation, my parents are in Florida, 2.5 hours. They're also 2.5 to 3 hours from Chicago. One of my sons is in North Carolina. It's about the same distance. Puerto Rico, there's a nonstop flight as well as Chicago. So not too bad of a structure. But let's talk about taxes. Can we go back to our situation of a person paying a 50% overall tax rate? Now, let's say we do that and we'll use a hypothetical $1 million a year income. And to make everything easy, we'll just say it's 50% tax. Yes, I know it's a graduated tax rate and it might be less for the first 400,000. But as opposed to pulling out a calculator and a tax table, we'll say it's 50%. On $1 million of income, that person, whether he or she has other income, we're just going to make it simple, is going to pay $500,000 of income tax. So they busted their butt and they did good. In fact, $1 million income is very good. They paid $500,000 in tax, and yes, I've excluded Fed and FICA, but they paid $500,000 in tax and they have $500,000 left. Not bad. If they moved to Puerto Rico and structured it properly through Puerto Rican tax grants, which we have with our company, first, their company would pay a 4% income tax.
Wow.
Right, 4? That's right. So we'll go to the company. $1 million, you just paid 4%. Well, that's $40,000. You now have $960,000. And I know what you're thinking. Well, when you take the money out, you pay tax, right?
Right.
Wrong. With a Puerto Rican tax grant, and they have grants under Act 22 for individuals, Act 20 for companies. They have some other tax acts as well. Most of them are now combined in Act 60. I'll bore you another day with the details. But my personal income tax rate on $960,000 of dividends in our example is zero. That's right. The person that made $1 million in Chicago that froze their butt off in winter ended up with $500,000. The same person that came to Chicago for the summer and spent their winter copying rays ends up with $960,000. So think of it this way. In $1 million of income, I'm getting paid $460,000 to cop a tan. Not a bad deal.
That's not a bad deal.
Not only that, no, and think about its applications. Sure, it's better to have more money. As you know, everyone's probably heard the story from one of their parents, rich or poor, it's good to have money. Anyway, and I'm sorry, I forgot to apologize to your audience, Melinda. Tax lawyers are known for having like the world's worst sense of humor. So if you think my jokes suck, that's okay. They're supposed to. I'm a tax lawyer.
I laugh anyway, so it's fine.
So if you think about it, you take a person, and I'll give you a good situation myself. I became a Puerto Rican resident 8 years ago. Gee, so I was 8 years younger, still approaching retirement age. And I had a choice. Every year I can take a big chunk of money and I can put it into a retirement plan. And I was trying to bank $100,000 to $150,000 a year in a retirement plan. So I could put the money in the retirement plan and I could allege I saved 50% on taxes, but that wouldn't really be true, is it? Because when the money comes out of the retirement plan, I'm still paying 50% tax on it.
Right.
But now that the money has grown because my retirement plan invested it, I'm paying 50% tax on what I put away, plus its earnings. So the question is, okay, I'm better off if I didn't have it, but what instead of taking that $100,000 and saving, not even saving anything because it's a deferral till you get the money back, but instead going to a position where I save $460,000 a year just on income tax. And what if I take that income tax savings and I put it into a bank account, a stock account, buy real estate, an investment portfolio? Gee, who needs a retirement plan? That is the retirement plan.
Right.
So it really changes the dynamic. And the reason our tax consulting firm has done so well for high income earners, investors, real estate professionals, if you look at it and go, boy, I couldn't work any harder, that's great. So you've maximized your income, but you haven't minimized your taxes. And the tax piece is one of the few items that's actually variable. And everyone says, no, it's not. You look in the tax code, it says what you pay. The tax code tells you the rate. What the tax code doesn't do is it doesn't give you a digest, a table of contents that says, how do I save money? Look here.
Right.
The tax code is voluminous, and there's so many small gems in it. For example, I mentioned Puerto Rico. And Puerto Rico has savings for businesses. It has savings for individuals. And a lot of people look at me and say, well, you know what, Richard? I don't want to move to Puerto Rico. I don't want to uproot my family. I love it where I am, whether it's Chicago, New York, Miami. And again, not during COVID times. Nobody likes it then. But they love where they are at. The fact is, we can structure, our firm does this, actually structures to take a piece of almost any single business, form it in Puerto Rico, and reduce your tax from 50% to where after expenses, maybe it's 20%. Gee, you just made 30% more money on your same money. So if you can't work harder, you can work smarter.
Yeah.
Now, I've given speeches and lectures on the Puerto Rican miracle. I have an article published called The Puerto Rican Miracle. What a shock. And the fact is, many CPAs and attorneys, when I teach seminars to other professionals, say, is it legal? How did you hear about it? Is the IRS aware of it? Well, the answer to all of them is yes, it's legal. Yes, the IRS is aware of it. In fact, there's been Senate reports determining how beneficial it is to Puerto Rico, because the more tax that can be saved and put in the Puerto Rican economy, the less money the Senate and the Congress and the president have to fund. So not a secret, but it's a secret to almost all attorneys, CPAs, and people. Now, how did I learn about this great secret? This is hysterical, folks. One of the many bar association or professional groups I'm in is the American Bar Association. As you can determine, I'm one of the section councils I'm a member of is the Income Tax Council. Well, they had a seminar that was joint with another group in Canada. Why is the American Bar going to Canada? Because it's fun. You know, aside from the seminar, you get a chance to see different parts of the world. So I went to the seminar, and like most tax seminars, I go there for a different reason, I believe, than most people. I don't go there to learn tax basics. I teach tax basics. What I go there for is to find out, is there anything, just one gem? If I go to a 2, 3, 4 day a week seminar, if I learn one new thing, it's a huge success. So back to my Canada story. I'm in Canada. I'm at the seminar. I am bored to tears. If you think I'm boring and not funny, you should have listened to these folks. They were terrible. And I sit there and go, this guy's so monotonous. This gal is just terrible. Why do I have to torture myself? And then this little gentleman gets up, and I can say little, and I'm not trying to be condescending. I'm sort of a tall person. I'm about 6'2" plus, and a lot of the folks in Puerto Rico are not, they're a little bit height challenged. So anyway, this little gentleman gets up, nice guy, well-dressed, very quiet voice, not real boisterous or excited like I am when I talk. I just love talking. Anyway, so he gets up there and he goes, yes, and you know, in Puerto Rico, we have a tax structure and you can pay no income tax and it's legal. It's in the Internal Revenue Code. And I raise my hand. I go, what? Yeah, you can set up your company here and pay no tax and it's legal. It's in the Internal Revenue Code. And I'm sitting there going, I think I heard him right. But here I am, allegedly one of the top tax lawyers in the world. How come I don't know about it? He finishes his speech. I go up, I introduce myself. And I looked at him and said, you know, I really thought I was good. I've been doing this a long time. Tell me, why have I never heard about this Puerto Rican tax structure? If I've been on top of my game, I only represent extremely affluent people. Why don't I know about it? You said it's been in existence since World War II, right at the end of it. So now it's been there for what, like 60 some years? I go, why don't I know about it? And he looks at me, he goes, we do a really bad job of marketing it. I said, what? He goes, we don't have a lot of money to market it. And I'm going, you're kidding me. And he said, no, the government doesn't have a lot of money to market it, so we just go to multinationals, and we've gone to every Fortune 100. I'm like, what? He goes, yeah, about a third of them are on the island. And I go, well, what do you do after them? He goes, well, we went to every pharmaceutical company. We gave them 30 years and no tax. So for a while, Puerto Rico was one of the biggest manufacturers of pharmaceuticals, but that grant ran out and they all moved. And we went to the Fortune 500 and we got like 20 or 30% of them. I go, what do you do now? He goes, well, we don't know. Like, what do you mean you don't know? And I said, give me your information. Give me some references. And he gave me his card and he gave me his information, gave me a list of some of the biggest law firms on the island, some of the biggest CPA firms on the island. I flew down, and if you could say I was skeptical, that would be an understatement. And I had some of the attorneys at my office do research on the Internal Revenue Code and the Internal Revenue Code section that said if you have a bona fide business in Puerto Rico, that you only pay taxes in the U.S. possession where you're located, not the United States, in which case that sounded pretty good. And went down, met with the government, met with some of the top lawyers on the island, top CPAs, and sure enough, they have this insane tax structure where you can apply for a grant with the government, and once the grant is governed, you only pay tax relative to the rate in the grant. Well, the early 2000s, I wanted to move down there, but they weren't as organized as one would like. I walked in and met with them, and they said, well, the tax rate's 10%. And I said, okay, what do I do to get a 10% rate? And they said, well, would you like a lower rate? Well, sure, I'd love a lower rate. And I go, how low of a rate can I get? They go, well, we could give you a rate of 0. Wow, I can get a rate of 0? What do I do? They go, well, can you bring 100 jobs to the island? I don't know. I haven't even opened up here. Well, if you guarantee to bring 100 jobs, we'll give you 0. And I go, well, what if I can only bring 50? They go, 50? I don't know, guys. What do you think? Lady, how about 5%? And I'm sitting there going, am I in Monty Hall's Let's Make a Deal? What if I bring 20 jobs? 8? Less than 20? 10? And they're like, okay. And I'm like, oh boy. Anyway, it sounded pretty good, but it just didn't work out business-wise. So since the early 2000s, I've been following their statute every year. So approximately every 8 years, they change the statute. Well, they changed the statute back in the late 2000s, created Act 73, where it gave a 4% fixed tax rate. And I was like, great. So in 2010, we actually, my partner and myself, set up our first business in Puerto Rico. And we flew down there, and boy, were we shocked. Yes, compared to all the Caribbean islands, got a great infrastructure. It's got like high rises and roads in San Juan. The greater San Juan area has probably got 1.5 million, 1.8 million worth of people. So it's a big area, lots going on, pretty good infrastructure, but it's not the United States. And that's okay because it's in the Caribbean. So different work attitude. We opened our business in 2012, things were going great. They changed the law. Well, you sit there and go, oh no, what happened? The law became better. So they made it easier for anyone in the service business. So what's the service business? All of you know. I'm a real estate agent, I'm a lawyer, I'm an accountant, I'm an engineer, I'm an architect, I do consulting work, any service industry, and they put on a catch-all or any business that's for the benefit of the Puerto Rican people. What is that? Anything that brings jobs, that's a benefit to the Puerto Rican people. They're very flexible on that. So we set up our first consulting firm there in 2010, and I moved there in 2012 and also applied for an individual tax grant that grants me 0 income tax on dividends, interest, capital gains. Not bad. And we then started working on our strategy because we already ran a US tax strategy company where we reduced the overall level of taxation for closely held companies and their owners. And we incorporated the Puerto Rican strategy as one of the strategies we can utilize when appropriate. My business partner's, in my opinion, a very smart guy, Oxford PhD. He was a partner at Deloitte & Touche. When I was younger, I was a manager. He was a partner in consulting. He's run Fortune 500 divisions. So we use his business expertise to try to determine which part of a company can actually be segmented and moved to Puerto Rico to reduce your overall level of taxation so that you can get a 20 or 30% tax savings every year without you physically moving to Puerto Rico. We have the entire structure set up, operable, and working instead of going through years of red tape. After we reach an accord on how it's going to work, and he's done his analysis, maybe a week, cuts it down quite a bit. And it's just been fascinating working with the government and the different lifestyles. And I can tell you the funny stories. Here's a Puerto Rico story. Everybody, I know we're in Chicago and you get some funny Chicago stories. This was great. I went to get my voter's card. Okay, I live in Puerto Rico, have my driver's license, went to get my voter's card. I showed up, went to the voter's place, the guard was outside, and occasionally you hit the language barrier. I speak some Spanish, I should be fluent, but I'm not. But my conversation was pretty much, hi, how you doing? Good. How about you? I'm okay. You know, we're not open today. I'm like, oh, Puerto Rico has a lot more holidays we do in the US. And I said, I'm sorry, I didn't know it was a holiday. Looked at me quizzically. He goes, no, senor, it's not a holiday. Now I'm confused. I said, are you normally open on Tuesdays? Yes. Is today Tuesday? Yes. What hours are you open? 9 to 4. And it's 11 a.m.? Yes. Is everybody at lunch? No. Where is everybody? They're at the beach. Like, what? He said, it's a nice day out. They went to the beach. I said, every day's a nice day. Do they go to the beach every day? Not usually, but today was very nice. And I was like, you're kidding me, aren't you? I took off of work. I went to the middle of nowhere, and they're at the beach. Yes. I said, okay, can I go to another office? Where's the next office that's closest to here? He goes, I can tell you, but they won't be there. Why won't they be there? He goes, well, they went to the beach. And I go, am I the only one not at the beach? Why are you at the beach? And he just looked at me like I was an imbecile. We went to the beach. Eventually, I got my voter's card, but yeah, stuff like that really happens. Full-time government office, all getting paid, and they all decided, you know what? Let's call all the other offices that do voter registration. Let's all go to the beach today. It's wild, but it's very Puerto Rican.
I love it. Well, thank you so much for coming on today, Richard.
You're welcome.
Sure. We'd love to have you on again because we didn't get into half of the topics and different sectors that you work in, which are all very fascinating. But if people want to get a hold of you, what would be the best way to do that?
Well, I'll give you my email and I'll give you my phone number.
Okay, fabulous. And what is your website too?
My website is Richard Colombik, C-O-L-O-M like Michael, B like Bravo, I-K like Kilo, richardcolombik.com.
Wonderful. And we can put your information below this video today in case people would like to. And again, thank you so much for coming on today. And everyone, thank you for joining us, and we will see you soon.
Appreciate it. Thank you, everybody. Hope I didn't bore you. Bye-bye.
Bye.